Thank you, Mr. Chairman. I want to thank the panel for your testimony and your willingness to come today. I'm going to make a brief statement, then, and I wanted to ask Mr. Eberley a few questions. So, community financial institutions have testified multiple times before our committee that they have not caused or been the root cause of the financial crisis, but that they are being burdened by regulatory requirements as if it were the case. And that is a concern of mine. New Hampshire is a small state, 1.3 million people. We have a rather significant community financial institution, small lending community financial institutions in our state. And I have, over the course of the last several years, had the pleasure of meeting and spending time with many of them. And I think they do a great job, whether they're credit unions or small community banks. But after a lot of the discussions that I've had with CEOs, presidents, executive teams of these institutions, I'm actually very discouraged and remain discouraged by some of the things that I've been hearing relative to the regulatory burdens. This is the single issue that I hear about from institutions in New Hampshire more than any other issue. So I have brought up in previous committee hearings some examples of these particular challenges. And I was a little surprised to hear Richard Cordray be shocked that these small institutions were being burdened. So he was kind enough to have someone in his organization call a specific bank president that I had asked them to call Piscataqua Savings Bank. And I'll get into the statistics in a minute. But, Ms. Eberley, I wanted to know from your experience in regulating these institutions, would you say that, first, it's more difficult for an institution, a small institution, to comply with the new regulatory mandates than the larger institutions?
In general, it costs more. The cost of complying with laws for smaller institutions is spread over a smaller asset base, so it costs them more.
So the economies of scale
Right.
is much easier for a larger institution than a smaller institution.
Yes.
Do you think that the number of regulatory changes negatively affected a community financial institution's ability to offer products and services to the consumer?
You know, I don't think so. I think we're seeing community institutions offer a wide variety of products, and I would just note that New Hampshire is home to the latest application for deposit insurance approved by the FDIC in March.
How many have there been in the last 5 years in our country?
Well, I can't go back 5 years, I apologize, but we had the bank in New Hampshire in March of this year. The prior one was an institution in Pennsylvania in 2012. Those are the two.
Would it be less than
since
5
well,
in the last
since the
5
crisis,
years?
since the crisis, end of the crisis.
Would it be fair to say it's less than 5 in the last 5 years, new institutions in the
I'd have to
country?
go back to 2010. I apologize.
I would submit that I think it's probably less than 5 new institutions in the entire United States over the last 5 years. And that is a concern of mine. I'm very proud of the fact that we have a new institution in New Hampshire. It's going to be a primary bank, a great institution. And I'm very proud of that that's in New Hampshire. What I am very concerned about is that there's only a few in the entire country, and the entire market is actually shrinking. And it brings me back to your testimony. 93% of all banks in the U.S. Are defined as community banks. Yet your testimony says that only 13%, that they hold just 13% of bank assets, yet 45% of the small business, of the small loans to businesses come from those institutions. So it concerns me greatly when I look at Piscataqua Bank in Portsmouth, New Hampshire. And let me just read you these numbers. Compliance costs, wages and benefits, $772,000 go toward compliance costs. Seminars and webinars, $11,915. Subscriptions, $38,747, for a total cost for this one bank for compliance of $823,278. That's 22.76% of their overall costs. So they have FTEs about 38. For compliance, they have 8. That seems rather unfair and unnecessary. Assuming that those figures are correct, does that make sense to you, that it's unfair and unnecessary?
I would have to evaluate that.
time of the gentleman has expired. The gentleman from